Hi guys, welcome to International Financial Management. If you are not shy, you can go on the camera if you like, just for us to introduce ourselves. We are 1 minute to 2 p.m. Okay, so let's get started. So good afternoon, everyone. Can you guys all see me? Can you guys all hear me? Yes.
Yes, ma'am, we
Yes,
can
ma'am.
hear you.
Okay. Good then. All right. So let's start. So my name is Van Vu, and I'll be your subject coordinator and your lecturer for this semester for international financial management. So before I start, I just wanted to talk about the class structure for this semester. So as we all know, this is going to be delivered online, and every week we have about 3 hours together. So in terms of the classes, we have a lecture from 2 to 4, and then we have a tutorial from 4 to 5. So what I want to do for this class this semester is that I want to combine these two classes together to make a workshop type of class, so that we have more time to interact with each other. Okay. Any questions so far? Okay. If not, let me start my lecture slide, and then we can go forward. So in week one for this class, the purpose of week one is we are going to just introduce ourselves, and I'm going to introduce to you the class, the scope of the subject, as well as the different important information that we need to know. For example, the assessment tasks that we have to do in this subject. Okay. So as you can see, we only have a few, only have a short lecture slides today because it's just an introductory lecture. And hang on, I've got a chat box here. How to turn on the audio. Avinash, I think at the bottom of your screen, you will see on the left, you see like a microphone icon. So if you click on that, you should be able to turn on your audio. Okay, are we all good? Avinash, are you able to connect to the audio now? All right, so for this lecture today, we're going to first talk about the introduction of the subject, and then I'm going to go through the different types of assessments with you guys. Then we'll talk about how the class will be delivered, and finally, how do we prepare for class, okay? So as I mentioned before, my name is Van, and I'll be your lecturer and your subject coordinator for this semester. And this is my email address. You're welcome to email me anytime. Also for consultation, because obviously we are doing online classes this semester. For consultation, it's going to be through Zoom as well. So to book a consultation, just email me, okay? Also, because I teach different subjects and I have other responsibilities to do as well. So when you email me, can you please put the subject code in your email title? so that I know which subject you're talking about and I can respond to your emails easily, okay, without using your email in my mailbox. Okay, so let's first talk about the different assessment types for this subject. So for the subject, you're going to have four assessment types. The first one is an assignment, individual assignment that is due in week 11. So with the assignment, I haven't written a concrete case yet, but it's going to be a business case, okay? So you're going to be assuming the role of a financial analyst, and you're going to have to look at a company that have international businesses, and you're going to have to analyze the foreign exchange rate risk exposure of that particular company, okay? So we'll talk more about the assignment later on throughout the course, but I think I will release the assignment around week 6 or so, okay? So that you have about a month to do your assignment, okay? So the assignment is going to be worth 30% of your marks, and there will be no supplementary assignment, okay? This is going to be individual, and you're going to submit your assignment through Turnitin, okay, as a business report. The second assessment task is a midterm semester test, and I did make a slight change in the structure of the assessment in the midterm test. So it is still going to be an online test of 1 hour, but the test will be comprised of multiple choice questions as well as 1 or 2 short answer questions, okay? So you will do this midterm test through Turnitin. Did we have any online classes before? Did we enroll in semester 1? Or this is our first time doing online classes?
I was enrolled in semester 1.
Okay, that's good then. So the reason I ask is because if you haven't done online tests before through the LMS, then you need to talk to me to go through the structure, okay? But if you're familiar with online classes, online assessments, then it should be no problem for you, okay? So once again, if you're not familiar with online assessment through the LMS, make sure you email me and I can go through a format test for you, okay? So the midterm test is going to be conducted in week 6 during the lecture time. So the test is going to be conducted on Tuesday, okay? So more information will be released later on. Assessment task number 3. So this is going to be some class quizzes, okay? So for this semester, what I do is that I'm gonna have 3 different random quizzes. So, and you're gonna be marked, so the 2 highest marks of the quizzes will be retained, and that will be your mark for the assessment 3, okay? Now, the quizzes will be announced on the day of the class, which means that if you miss the class, you might miss the quiz, okay? So make sure that you turn up to class frequently so that you don't miss this assessment, okay? And the class quizzes will be around 30 minutes, okay? So I'll let you know more about the structure of the quiz later on, but it'll be a 30-minute quiz. So for a 30-minute quiz, we're looking at about 10 to 15 multiple choice questions, okay? Assessment task 4, this is just your final exam. So with your final exam, it's going to be a 2-hour final exam. It is worth 50% of your total mark, and we have a hurdle rate of 50%, okay? So that means you need to get 25 marks out of the exam to pass the final exam, okay? So yes, there is a hurdle rate of 50%. So I think this is the key information so far with the assessments. Any questions so far? Are we clear of all the assessments we need to do for this subject? Yep. I'm going to take silence as yes. Okay, so let's move on to the structure of the class. I've got some chat messages here. Thanks, guys. Aria, do we have online final exam? Yes, the final exam is going to be online as well. The structure of the final exam, I'm gonna give you a practice final exam so that you can see what kind of structure it is like, okay? Avinash, is the assignment a group or an individual assignment? So the assignment is going to be individual, okay? I'm gonna make 2 or 3 business cases, and depending on your student ID, you're gonna be given a different case, okay? Okay, so with the topics for this subject, on this slide here, I've got the all the topics that we're going to go through for the subject, starting with International Monetary System, which is next week, and the balance of payments, which is also covered in next week. Then we will talk about the structure of the foreign exchange market, including the spot exchange market and the forward market, okay? A big part of this subject is on foreign currency derivatives. So when we say derivatives, we're talking about forward contracts on current foreign exchange. We're talking about options, and we're talking about futures contracts, okay? So these are the important derivatives that we're going to cover in this subject. And throughout the course, we're going to look at how we can use these derivative contracts to hedge foreign exchange rate risk. Okay. Number 5, foreign exchange parity relations. Number 6, foreign exchange exposure and management. And finally, international banking and money markets. Okay. So next week, we are going to cover topics 1 and 2, which is chapters 1 to 3 in your textbook and going forward. Okay. So let me briefly talk about the class structure as well. So as we mentioned before, we have 2 hours lecture from 2 to 4, and then we're going to have 1 hour of tutorial from 4 to 5. So my experience from last semester delivering a class online is that instead of me talking, giving the lecture for 2 hours and then talking through the tutorial questions for the next hour, it's going to be very boring. And I don't think you guys will get a lot out of it. Okay, so if you want to listen to me talking for 2 hours, I've got my recordings from last semester for that purpose, if you want. But I think a better use of our time is that I'm going to convert these 3 hours into a workshop or seminar type of class, okay, where we have more interaction in the class and we have more time to go through individual problems, okay. So for this class to work, I'm going to structure it the following way. So in the 3 hours that we have together from 2 to 5, the first 1 hour will be used to talk about the key concepts that we introduced in that week. Okay. So instead of me going through the lecture slides in 2 hours, I'm going to just summarize the key concepts in the first hour that we have together. And of course, if you have any problems or any questions about these concepts, I'm happy to go through them in depth with you, okay, within that first hour. And then in the last 2 hours, we are going to use this time for problem solving. So we're going to spend more time on the tutorial problems and examples to make sure that we understand the materials that we introduce, okay. Also, as I mentioned before, with assessment task number 3, we are going to have some class quizzes. So in the last 2 hours of the class, we will schedule the class quizzes then as well, okay? And if we still have time, we can discuss the assignment case for your assessment 1 as well, okay? Any questions so far with the class structure? Now, I understand that some students have a clash in their timetable, so I think another subject has the same time for their lecture as ours. So if that is the case, and if you can't attend the class, feel free to listen to the recordings, which I will upload later on, okay, during the week. All right. So for the seminar class to be effective, I'm going to need you to help me with the following. So before you go to class, make sure that you need to do some preparation, okay? So first, you need to read the relevant chapters and the relevant lecture slides. And if you want, you can listen to the recordings that I have from the previous semester as well. Note down any concepts that you are not you're not confident with, any concept that you want me to go through in class in detail, okay? So that we can discuss in the first hour of the class. Also, to participate in tutorial questions, you will need to do the tutorial beforehand, okay? So make sure that you prepare the tutorial questions before you turn up to class as well, okay? And also participate in class. So in terms of study materials, to help you study this subject more effectively, I have prepared the lecture slides, the tutorial questions, and I have a link to the ebook on LMS as well. So you can have a look at the textbook as well. Now, I also have some additional materials for you on the LMS. Now, for each of the chapters we introduce in the subject, I've created a revision quiz so that you can revise the concepts at the end of the week, okay? So make sure that you check out the revision quizzes as well. It will be an important resource for you to study for the midterm and the final exam as well, okay? Also, as I mentioned before, I make the lecture recordings from last semester available for you to watch if you want. And sometimes if I read the news and if there's something related to the subject, I'll upload it on the LMS too, okay, as additional readings if you want, if you're interested. Also, I've got my consultation hours. So we are paid 1 hour per week to for student consultation, and make sure that you use this resource wisely, okay? So I'm available most of the weeks, and if you want, you can just email me for consultation, okay? All right. Any questions so far, guys?
Yeah, I got a question. The last semester's recordings, are they the same, using the same lecture slides we'll be using this semester?
Yeah, I have to do a little bit of fine tuning, but most of the time it's similar.
Okay,
So,
no worries.
Yeah. So I will cut the videos into different topics, so it's easier to navigate. But yeah, most of the times the materials are the same.
Well, I was just, because you said make sure you read the lecture slides before coming to class, and also it would help watching the lecture recording. And I was just thinking, if I watch the lecture recording, will that kind of cover what's on the lecture slides, or will I still need to revise that as?
Yeah, so the lecture recordings will cover the lecture slides.
Okay, thanks.
Yeah. Thanks, Jane.
And I am unable to access the links you have provided for the lecture recording.
Okay, let me check again. It's on YouTube, so if you can, so if you go to YouTube and you search Fin3 IFM, and you type in my name, I think it will come up. But yeah, I'll check the link again for you. Any further questions before we move on? Okay, all good. Thank you. So for the next hour and 10 minutes or so, let's go through the tutorial questions for today. And
Yeah,
before,
I'm trying something. Sorry, there is a net issue. I am lost. Yeah, I'm unable to access the lecture recording link you have provided there on the LMS.
yeah, I'll have a check for you, but it should be on YouTube.
Also, there was
Okay, but
drive been shared for the Zoom recordings. I think we can access that, and all the recordings are there when the drive.
Chandrima, can you say a bit louder? I can't hear you. Sorry.
There is a drive link on that Zoom recording tab.
Yeah.
Google
So,
Drive. I think the recordings are uploaded in there. Is it the same recordings you're referring to?
yep, it's the same
but
recording.
there is no lecture 2 provided there. There is from lecture 3 and 4.
Okay, I will
There are
check
no
it for you.
lecture 1 and 2. Yeah.
Yeah, I'll
Thank
check
you.
it for you. Yeah. So, I'll organize, as I mentioned to James before, I'll organize the lecture into topics so that you know which one to click on. Yeah, but I'll have a look. Thanks, guys. Manali asked, the revision quizzes, will that be available every week, as you said on LMS itself by the end of the weekly lecture? I think all the revision quizzes are already uploaded on LMS, so you should be able to see that now. And the quizzes are available for all of the weeks, all of the chapters that we cover in class. Okay. So have a look again. It should be on your LMS. Okay. So as we mentioned before, with the class, I'm not going to go through all the lecture slides again. I'm just going to go through the main points for today's lecture, and then we can go to the tutorial questions. Okay. So let me share with you my tutorial slides. Okay. So for this lecture, this is an introductory lecture. So we are just going to talk about the main purpose of international finance, and we will introduce different trends, different emerging trends in the international finance landscape. Okay. So and I want to just use this lecture to see how we go with the seminar type class. Okay. So for chapter 1, which is globalization and the multinational firm, the key important points that we introduced in the lecture slide were, number 1, globalization. So globalization is a trend where countries in the world start to do more business together. So you see more international trades, more transactions happening across the border, right? So globalization has been a trend in the past few decades. And can someone explain to me why that happens?
Expanded opportunity.
Expanded opportunity, right? Spot on. So if you go overseas, you've got a bigger market to sell your products, okay? Anything else? So what enables globalization, okay? So what makes it a reality, okay?
I think transportation, just over the few
Transportation.
decades, flight and how we can actually get export and import a lot faster.
Exactly right. So transportation. So a lot of things that happened in the past have helped companies and countries around the world trade with each other. So ease of transportation is one. We have more airlines now, right? So we have ships, we have airlines, different ways of transportation. Number 2, we have a lot of advancement in information technologies, right? So before the internet, it used to be hard to communicate with anyone in a different state, for example. But since the internet was invented, and after that, a lot of other IT inventions, it has become much, much easier to communicate around the world, okay? So other technologies as well. So if you think about, for example, trading, international trading, say if you want to trade on the stock markets, for example. So if I want to trade an American company, right? If I want to buy shares from Apple or if I want to buy Amazon shares, it's quite easy for me as an Australian investor to do so. I just have to go into my CommSec, fill in the form. I think it's W8 or something. And then I can then access international stock markets, right? So all of that technology advancements have helped make it easier, has made it easier for people or for companies to trade around the world, okay? Anything else? What else made globalization a big thing in the past?
I think increased mobility of labor.
Mobility of
People
labor,
are,
right?
yeah.
Spot on, right? So mobility of labor, it's easy for people to travel overseas these days. What else?
The trade barriers, I guess, which used to exist earlier in maybe a decade ago or something, now those trade barriers are lessened due to the globalization.
Exactly right, spot on. So in the past few decades, there have been a lot of trade agreements where countries agreed to reduce trade barriers. So they reduce their taxes on foreign goods and services to encourage foreign trade partners, okay? So these also help with globalization, okay? Spot on, guys. So these were the important factors, important developments that help facilitate globalization, okay? So what were the benefits of globalization? Why is it important to have trades with our overseas partners?
I think international relations became better with every countries. Now they don't feel the boundaries between one or more countries when they are trading globally, and also it helps in reducing their trade the duty that they used to pay earlier. It was more. So when the globalization became possible legally, and when it was passed by all the countries.
Yeah, so you're talking about the trade barriers, yeah? So it used to be more expensive to ship your goods and services outside because you get taxed. But now a lot of these trade barriers have been reduced. So
Yeah,
it's easier for
and
you
there
to
is
I think it increased the
lower cost of
social
production.
welfare.
guys, can you, okay, just one by one. Can we have Lalita first?
Yeah, the benefits of globalization, we can say that the cost of production has decreased a bit because uh, we can access the products, we can access different countries' production services and we can choose which is best for us. So that reduces the cost of production for a particular company.
Yeah, that's right. So the competition have reduced the cost, right, for the consumers. Okay. Gayatri, did you want to say something?
Yeah, I think with the increase of globalization, it led to global cultural increase and political and economic integration around the world as well. So there's more exchange of finances across different countries and between various multinational corporations. I think that's expanded the business as well as the financial structure across the world as well.
Exactly right. So when you open the border to foreign investors, you get more finance into your domestic economy. So the financial sector also benefit, right, by globalization. Um, Now, what were the issues? Okay, so besides the benefits of globalization, there have been some issues as well, right? That are highlighted in the recent decade. Okay, so what do you think are possible issues with globalization?
Competition increased because now no one's at the monopoly of trading with other country. Everyone's trading globally. So due to that perfect competition, I think it affected the political background of every country, as
Yep.
political
So competition,
background
yeah.
comes in between in there.
Yep. So competition is one. Anything
Political
else?
risk.
Political risk, yes. So political risk, James, can you explain a bit more?
As she was just saying earlier, when a lot of countries are trading with each other, as it is these days, not so many countries like each other. And so once you start trading with a different country, that could create tension with another country.
Yeah, so that's a very tricky issue that you touch on, James. So that's right. So when you trade with other countries, and if your trade partner is in conflict of with one of your political allies, that could create some troubles, right? Now, a lot of the issues with globalization also come with equity, right? Equality issues, okay? So, for example, if you think about a big company like Amazon or Apple or Samsung, like big multinational corporations, so most of the time they will have their factories, their production sites in countries where the labor cost is very low, right? And then they will sell their products across the world. So in the past decades, multinational companies have grown in size, right? They have grown a lot. But what happens to the labor force in the developing countries? So we have seen a lot of issues in the news where a lot of the factories, say Apple factories or Nike factories, the working conditions are not too great. Okay, so one of the main issue of globalization is the issue of equality, where the question is how do you divide the wealth, right? So how do you make sure that the wealth is created and distributed fairly to everyone in the supply chain? Okay. So this is one of the key issues that motivated movements like Brexit or the issue in Greece, where they were talking about Brexit. Okay, so they were talking about breaking away from the European Union. So some of these issues are happening recently in the recent decade because of the inequality in the wealth distribution that I mentioned before. Okay. So these are the issues that you need to be aware of going forward because it's something that is happening at the moment. Okay. Okay. So in the second part of the chapter 1, we also talk about the distinction between international finance and the traditional finance. So if you compare, say, a company that only operates in the local community and a multinational company, right? What is the key difference between the two in terms of finance? Okay. So number one, if I just trade, say, if I just operate in my local community, there are different types of risks that I don't have to worry about. Okay. So, for example, if I don't have to source my supplies from overseas, I do not have to worry about the exchange rate between my country and my supplier. Okay. So we'll talk about different types of risk exposure later on in question 1. Different cost structure. So what do we mean by that? So an example is if you have a domestic company, your labor, right? Your labor, your production, everything is sourced from the same local community. So is your income, okay? But if you operate different production sites across different countries, then your cost structure will depend on the cost structure in the country that you have your operation. Okay, so opening yourself to the international market also introduces different types of cost structure. Okay, opportunity sets. So if you can sell, of course, if you can tap in the international market, you've got a bigger market. You have a bigger pool of potential customers to sell to. Okay. Okay. So in chapter 1, we also talk about key developments in the international finance landscape. So we mentioned before that with globalization, one of the things that have helped globalization is the development of trade agreements, where countries come together and they agree to reduce the trade barriers to encourage trading with their trade partners, right? So some examples of trade agreements are the World Trade Organization, or NAFTA, which is the North American Free Trade Agreement between the North American countries. Okay. Privatization is also one of the key developments in the past decades. So if we talk about privatizations in the recent years, we're talking about developing countries that used to be closed to the world, and now they open up for foreign investors. Okay. So privatization is when a state government sells their assets, say their enterprise, their state-owned enterprises, to the private sector. Okay. So one example I can talk about is in Vietnam. So I was born and raised in Vietnam, right? I came to Australia in 10 years, 12 years ago or something. So in the 1980s, after the war, Vietnam was very close. So all of the industries were controlled by the government, right? So in 1986, the government decided to open up the country for foreign investment. And as they opened up for foreign investment, they started to sell their state-owned assets to foreign investors, okay? So it used to be that all of the industries in Vietnam were public, so the government controlled most of the industries, but now you can see that it's a bit more open. So even education, the education sector now is also privatized, okay? So the implication of privatization for foreign investors is that it opens up new investment opportunities for institutional investors, okay, to participate in the state-owned enterprises, okay? So as a result, privatization is also an important factor that facilitate international financial transactions, okay? On the other hand, we have also seen a lot of complications in the international markets due to globalization. So the first thing I want to talk about is financial crisis, okay? So because of international trade and economic integration, what we see is that increasingly countries have become more independent, interdependent, right? And the implication of this is that a crisis in one segment of the market, so a national crisis, for example, could easily become a global crisis, okay? Because investors around the world are more interconnected than we think, okay? So, for example, in 1997, the currency crisis in Asia, in the Asian countries, started to spread around because a lot of the Western countries invested in the Asian countries in trouble, okay? So through their financial investment, it creates the interdependence between these Asian countries and the richer countries that invest in them, okay? Similarly, with the global financial crisis 2007-2009, it started with the subprime mortgage market in the US, and it spread around the world to create a global financial crisis, right? That was because a lot of financial institutions, international financial institutions, invested in the US at that time, okay? Similarly, for the Greek debt crisis in 2010, what happened in Greece started to spread around other European countries as well, right? Because they were part of the European Union. So with globalization, we would also have to be aware of the interdependence of economies, okay? Due to their financial transactions, okay? Also, one of the concerning trends that we see so far in the past decade have been the rise of nationalism, okay? So we've seen issues like Brexit, which is when Britain decided to break away from the European Union. Something similar was discussed in Greece in 2010, although it didn't eventualize. And also the US have been withdrawing from different trade agreements like the TPP, so on and so forth, right? So the important thing to think about here is that you need to think about what these trends tell you about why people are concerned about globalization, yeah? So the important question here for us to ask is what do these events signify, okay? So what do we think? Why do we think Brexit happened? Or why do we think the US withdrew from the trade agreements that they previously signed, okay? So does anyone have any thoughts in this matter?
Agreement with the norms.
Can you say that again, please? I can't hear you well.
Disagreement with the previous norms.
Disagreement, right? So why are the disagreements?
There might be, I don't think I'm completely right, but there might be chances that like US withdrawing from the agreement, previously US must have seen some prospect for themselves, but right now it does not see any chance of them having any profits. So, and there might be other factors as well.
Yeah, spot on, right? So when you withdraw from an agreement, that is when you think it's not good for you anymore, okay? So, so with the trade agreements, one of the reasons why the US government wanted to withdraw from these agreements was because they think that the other countries benefited from the agreement more than themselves, okay? And a lot of that is to do with political play, okay? What's interesting here is I want to talk about the issues with Brexit, okay? So did anyone remember what happened during Brexit? So the issue was when the citizens in the UK voted either against or for being part of the European Union, right? So surprisingly, at that time, people thought that they are going to still stay in the European Union, but surprisingly, the vote result came out, and the majority of British wanted to break away from the European Union. Okay. So, what were some of the concerns in Brexit? So, for people that voted against Brexit, what were some of their concerns? Did we remember?
A lot of it was people from the European Union wouldn't be able to freely come and go into the UK anymore. And that obviously loses a lot of jobs and a lot of lost opportunities.
Exactly right, spot on. Thanks, James. So a lot of the issues was about immigration, right, and about the labor market. So some people perceive that because of the immigration law between the UK and the European Union, a lot of the jobs were taken away, okay? So I'm not saying whether this is right or wrong, but I'm just saying that these events, these incidents highlight that there are some parts of the world where people did not benefit from globalization, okay? So there are some people that perceive that globalization actually works against them. Okay. So these are the issues that highlight, these are the incidents that highlight the issues of inequality, of globalization. Okay. All right. So finally, I'm just going to talk about the emerging trends that we are seeing coming out of the COVID-19 situation. Okay, so I think these are the emerging trends in the international finance landscape that as a person going into the workforce really soon, this is something that might be of interest to you guys. Okay. So what do you think? How would the world look like after COVID-19? So I think one of the main things for international companies that they need to think about is firstly the issue with their supply chain. Okay, so diversification of supply chain is going to be one of the things of concern to a lot of people. Okay, so why do I say so? That's because right now before the virus crisis, a lot of multinational companies have factories in China, okay, and other parts of the world. So what happened when the factories in China were forced to close? Their production line got affected, okay? So as a result, one of the concerns so far with the CEOs of multinational companies is about their supply chain, okay? So how do they make sure that their supply chain is resilient to changes, okay? Also, another emerging trend that I have seen lately in the news as well as in the research literature is the rise of socially responsible investors, okay? So if you read the news or if you look at some job ads lately, you will see that there have been a few on ESG investment, okay? So ESG has been one of the major concerns for institutional investors in the recent years. Another emerging trend is also climate finance, okay? So issues like carbon trading, carbon emissions, so on and so forth. And finally, there have been a big, not big, but a growing sector of the financial markets for green financial products like green lending or green bonds, so on and so forth. Okay, so I think these are the emerging trends that as a person going into the job market soon, you should be aware of. Okay.
Can you please repeat this again?
I'm sorry, I can't hear you too well.
Can you please repeat this social responsible investing? I didn't get it properly.
There's a lot of background noise for some reason. I'm sorry, I can't hear you. Can you put your microphone maybe closer to your mouth?
Actually, he wants you to repeat the topic socially responsible investors again.
Oh, okay, I see. Thanks, Vivek. So with socially responsible investors, so these are investors that invest in socially responsible products. Like, so I know that there are some investors that don't invest in sin industries like tobacco or alcohol, so on and so forth. So what these investors look for, they're looking for investment options in companies that are environmentally friendly. Okay. Climate finance relates to issues such as carbon emission, carbon trading, and finally, green lending or green bonds are financial products related to projects for, say, for example, for clean energies. Okay, so these are the new developments in the financial sector that I think is important for you to understand. Okay. I've got a chat message. All right, thanks. Okay, So these are the main points for the introductory chapter, chapter 1, which we introduced this week. Any questions so far? If not, let's take a short 5 minutes break and we'll come back at 55. When we come back, we'll go through the tutorial questions together. Okay. So I will see you guys in 5 minutes. Okay.
Okay, thanks.
Thanks, James. Okay. Sorry, I was replying to my email just before. If some of you saw my mailbox, just ignore them. Okay, I'm just gonna answer some questions in the chat box. Yeah, so we still have a break into, well, 55, which is basically now. Charlene has a question. Are you going to upload this lecture material afterwards? I have uploaded the lecture slides and the tutorial questions on LMS. I will upload the tutorial solutions on LMS later on at the end of the week. Okay. Yeah, so the solutions to tutorial questions will be uploaded by the end of the week. Okay. Are we ready to come back? So guys, just a small request. So for next week onwards, just because I feel better to talk to like a person rather than to a screen. So next week, if you are not shy, if you're comfortable with having your screen, your video on, can you please turn on your video? Okay, so
Yeah, I'll give it a go next week.
sorry, James, what did you say before?
Oh, I just saying I'll give it a go next week.
Okay, thank you. Yeah, it's just a bit weird to talk to myself to the computer screen. Thank you. Okay, so for today's questions, we don't have a lot of questions. It's just an introductory class. So why don't we open the discussion to the floor? Okay, so question 1, chapter 1. Why is it important to study international financial management? Why do you think it's different from just the traditional finance? Okay.
It's because the world's becoming more globalized, and we're trying to keep up with it.
Yeah. So that's correct. Something along these lines. So it's very rare these days that you'll be working for a company that does not have any international business at all, especially if you work in the finance industry, right? So most of the banks, or the big four to be exact, they all have some sort of international engagement, okay? Lalita, do you want to say something?
Yeah, as it has an integrated community economy nowadays. I mean, the countries are having integrated economy, and as you said, every company, it's difficult to find a company which does not have a product from a single country origin. I mean, every company has a products of origins from different countries, assembling in one country, production in other country. So it's important for us to learn about international financial.
Yes, spot on, right? So, so because of the world that we live in today, the issues with international finance become quite important. Okay, so some of the examples, we'll talk about that in question 2. Sorry. Yeah. So with international finance, it has become more important given the globalization that we live in today. Okay. So just an example, just to illustrate the scale of globalization, I took 2 examples. So one is from Nike. So here we're looking at the supply chain of Nike, okay? So Nike is a multinational company, and they mainly operate in the sports equipment and fashion, right, industry. So on this slide, what I have is that I have a map of where they have their supply chain, okay? So this is where Nike has their factories. And as we can see on the summary here, so they've got their factories in about 40 countries, okay? with 461 factories, and they employ about 1 million workers. Okay, so about 1/5 of Melbourne. In terms of materials, they source their material from 11 countries and from 69 facilities. Okay, so this is a typical picture of a multinational company like Nike or Apple, right, or Amazon, so on and so forth. The second example that I have here for our class is I took this from Qantas annual report, okay, 2018. So what we see here is we see the finance side of a multinational company, okay? So if we look at the shareholder information of Qantas in 2018, what do we see? So Qantas is an Australian company, okay? So the top shareholders are typically institutions, and where do they come from, okay? So we have HSBC. This is a UK company, a UK bank. We have JP Morgan. This is a US bank, okay? Similarly, we have Citicorp. This is some trust account. And we also have some other international banks, okay? International financial institutions. So this example tells you how much a typical company, a big company, Australian ASX 200, how their shareholdings typically look like, okay? So their shareholders don't just come from Australia, their shareholders come from around the world, okay? Okay. So question 2, how is international financial management different from domestic financial management, right? So if you were the CFO of a domestic company, how would your job be different from a CEO of an international company? Okay. So what are the things that you have to look for in addition to the things that you would already look for? Okay.
There'll be some exposure to the foreign exchange if it is international finance, but there'll be no impact if it is domestic.
Exactly right. So if I trade with my overseas partner, I need to worry about the exchange rate risk. Okay. So exchange rate risk is one important risk that I need to think about if I operate internationally. Okay. So how do we define foreign exchange rate risk? So this is a risk related to the unexpected movement in the foreign currency value, okay? So for example, now let's look at a stock investor, okay? So suppose we start with $100 and we invest in the UK, yeah? So at the moment, the exchange rate is for every £1, we are going to exchange for 2 Australian dollars, okay? Which means that if we convert $100 into the pounds, we are going to get 50 pounds. So what we will do is that we're going to use this 50 pounds and we invest in the UK stock market. So in 1 year's time, our stock portfolio increases to 60 pounds. So we have a capital gain of 10 pounds, okay? Now, at that time, the exchange rate has changed. So now for every £1, it is only worth 0.75 of a dollar, okay? So £1 is only worth 75 cents now. Oopsie, I shouldn't show you the answer. So the questions here for you is firstly, can you compute the investment return in the pounds, right, for this investment? And secondly, if you convert this back into the Australian dollars, what will be your investment returns? Okay. So in the next few minutes, can you help me compute 2 things? Number 1, what would be my investment rate of returns if I'm computing my returns using the pounds? Number 2, because I'm an Australian investor, I'm going to have to convert this pound investment back into the dollar. So what is my investment returns in the Australian dollars? Okay. So help me do these two things. So to compute an investment return, we are going to take the price that we sell the investment at minus the price that we buy at the start. So this is our capital gain, right? And then we're going to divide that by the price that we buy. Okay. So this formula gives us the rate of return for our investment.
Can you please repeat that?
Okay. So if you want to compute a rate of return for any kind of investment, you're going to take the price that you sell the asset at, you minus the price that you buy the asset at the start. So this difference here is the capital gain. And then you're going to divide it by the price that you buy the asset at. Okay.
Okay, thank you.
Is it we have loss of 10% for Australian market and then 20% profit rate of return in the UK market?
Yeah, something like that. Can you tell me how you get the answer?
Initially, we subtract 60 from 50 and then divide it by 50. It's the general rate of return we get for UK. And
exactly.
for the, we change the exchange rate, the $60 multiplied by 0.75, it comes to $45.
I'm sorry, there's a background noise, so I can't really hear you too well in the second part. Can you repeat the Australian return for me?
We use 0.75 exchange rate per pound to convert to 60 pounds. It comes down to $45, I guess.
$45. Yeah, that's right. That's right. So for 75% of the $60, 60 pounds. So that means my investment return would be 45.
Yeah.
Minus 100, and then divided by 100. Right. Spot on. Thank you for the answer. So yeah, so this is the correct calculation for the investment return in two different currencies. Okay. So if I use the pounds to compute my investment returns, we will find that we have a capital gain of 20%. Okay. Which is the difference between 60 and 50 divided by 50. Okay. So on the face of it, it looks like we have made a very good investment. Okay. That yield 20% of returns per year. Now, if we take into account the exchange rate movement, we will end up with a loss. Okay. So when we started, the Australian dollar is worth, so 1 pound is worth 2 Australian dollars. And as a result, 50 pounds is equivalent to 100, okay? But at the time that we convert our investment back into the Australian dollars, 1 pound is only worth 70 cents of the dollar, okay? So as a result, when we convert 60 pounds back into the dollars, we only get $45, okay? So this means that our investment has yielded a loss of minus 55%. Yeah, that looks correct. of minus 55% from this investment, okay, which is a really big loss, okay. So from the two calculations that we have done before, can you tell me where the loss comes from? Is it from a bad investment, or is it from exchange rate risk?
Exchange rate risk.
Exchange rate risk, right, spot on. So it looks like this is not from a bad selection of stock. It is from a bad movement in the exchange rate, okay? So this is an illustration of how foreign exchange rate risk can affect your investment return of foreign investment. So as a result, you will see that throughout the second part of our subject, we will focus a lot on exchange rate risk management, okay? So we look at different tools that companies or investors use to manage their exchange rate risk exposure, okay? I'm just going to erase all the drawings so you can see the solutions, okay? Okay, so the second type of risk that distinguishes a international finance and domestic finance is sovereign risk, okay, or political risk. So this is something to do with the regulations in the foreign country that might work against our investment, okay. So for example, there are certain countries at certain different times where they impose capital control laws, okay? So when we say capital control laws, we are talking about the regulations that limit the amount of money going in and out of the country, okay? So for example, there could be limits on how much money individuals can take in and out of the country. So every time when you travel, you can only bring in Australia, say, 10,000 USD, for example, okay? There could be limits on foreign exchange rate trading volume in the foreign exchange market. So for example, in a certain month, there could only be, say, 5 million Australian dollars traded in the foreign exchange market, okay? There could be limits on international trading of financial assets, okay? So you can't easily buy and sell financial, say, stocks or bonds in a foreign country, okay? Now, why do you think these laws are in place, okay? So when would the government impose capital control laws? So when do you think these laws are important and in which context, okay? So typically for a, say for a free or capital country, say the US or Australia, normally these laws are very little used, okay? So you don't really see these laws too much in Australia or in America. But in countries where they have a managed float or a fixed exchange rate regime, in which the government targets a certain level for the exchange rate, these laws are used to make sure that the exchange rate stay in line, okay, with the target. So for example, if I'm the Prime Minister of Australia, and I think that I'm going to peg the Australian dollar to the US at a 1-to-1 ratio, okay? So I want to make sure that at any point in time, my Australian dollar is always equal to the US dollar, okay? So of course, I can't control the demand and supply or the trading activity in the international market. But what I can do is that maybe I can say, okay, so this month, I'm not going to allow any foreign investor to buy or sell the Australian dollars, okay? Because I have achieved the target goal, okay? So if the Australian dollar is currently worth $1 US, I think this is the fair price of the Australian dollars. I would then stop people from buying or selling the Australian dollars to make sure that it does not stay out of the equilibrium, okay? Alternatively, I can use my foreign reserves. I can buy and sell foreign currencies to make sure to adjust the value of my currency. Okay, so we will talk about these different exchange rate regimes next week when we talk about international monetary system. Okay. Okay. So as an example of how sovereign risk can affect the value of your portfolio, let's look at this example from Nestle. Okay. So Nestle is a Swiss company and they are listed on the Swiss stock exchange. Okay. And what we look at here is we look at a regulation in 1988, which affected the class of shares that the Swiss company can have. Okay. So what happened in Switzerland was that before 1988, before November 1988, Swiss company can issue two classes of shares. So you issue one class of shares to foreign investors and you issue another class of shares to your foreign investors. Okay, hang on, I have a chat message in the chat box. Avinash say it's registered in India too. Avinash, are you referring to the example we're talking about here with the dual class shares? Anyway, let me go through this example first. So in this example, we have a country that allows two different classes of shares. One for foreign investors and one for domestic investors. Okay, so in the modern time, this is what implemented in China. Okay, so in China we have Class A and Class B shares. So foreign investors trade, I think, Class B, and domestic investors trade Class A. Okay. Now, in theory, if you have a financial asset written on the same fundamental, in this case, we're talking about a company, then in theory, the value of these two financial assets should be the same. Okay, so you have so the foreign investors and the domestic investors, they both have a claim on the firm's asset, on the firm's cash flows, and as a result, because of the same fundamentals, their share prices should trade at the same price. Okay, so therefore, the only difference between the share prices of the foreign shares and the domestic shares is only explained by the separation of the share class. Okay, so the two classes of shares here should not have any difference in fundamentals. The only difference in their share price should be explained by the difference in their investment, in their investor class. Okay, so before 1988, if I invested in Nestle as a foreign investor, I will be buying the shares at this price. Okay. At the same time, a domestic investor will be trading the shares at this price. Okay. Now, in 1988, November 1988, they decided to remove this regulation, meaning that the Swiss companies, the shares of Swiss companies will be traded in one class. Okay, so all investors now will be trading in one class of shares. Okay, so what we observe in terms of the share price of Nestle after 1988, November 1988, was that the foreign shares started to go down and the domestic shares started to go up. Okay, as the two classes of shares converge. Okay, so what is the implication of this regulation for a foreign investor in Nestle stocks? Okay, if I am a foreign investor and I hold a Nestle stock before 1988, would I be happy about it? Would I be happy about this regulation?
Is a registered one.
So yeah, so if I'm here, if I'm a registered one, if I'm a domestic investor, I will be very happy about it, right? Because my share price goes up. But if I'm a foreign investor who has the bearer stock, I would not be too happy about it, right? Because my share price decreased. Okay. So this is one of the illustrations of how regulations can change the value of our stock portfolio, okay, without us doing anything different, okay. So in this case, as a foreign investor in Nestle, I will be worse off because my share portfolio goes down in value, okay. So this is how a regulation change in a foreign country might affect the value of our portfolio in that country, okay. Okay, so in addition to risk exposure, now we talked about this before at the start of the class. What is the second difference of international finance and domestic finance is that with international finance, we need to be aware of different types of market frictions, okay? So when we think to go overseas to trade, for example, what are the different market frictions that we need to consider? Okay. So firstly, if I want to attract, say, if I want to attract foreign investment, I need to make sure that my country actually welcome foreign investors, okay? Otherwise, nobody can invest in my country, I mean, in my company. Second, restrictions on goods or people, okay? So we talk about something like immigration law. So if I want to attract foreign talent, I need to check whether the regulations in my country actually allow foreign immigration, okay? Transaction costs. So this is quite relevant for, say, for example, if you think about financial investments, okay? So if I want to invest in a foreign country, for example, how costly is it, okay? So how costly is it for me to trade shares in the American market or in the Chinese market, so on and so forth, okay? Shipping costs. So if we are in an industry where we have to ship physical goods, this is something that we have to think about, okay? So compared to a domestic company, the shipping costs for international companies would be a very big cost, okay? Tax arbitrage. So this is an interesting thing for international companies in the sense that by being able to go overseas, sometimes they are able to avoid taxes as well, okay? So for example, big companies like Google or Facebook, so on and so forth, they have been criticized for not paying taxes in the country that they operate in, okay? So how do they do that? How do companies avoid taxes internationally? Budi?
Yeah, they usually involved in various projects that gives back to the community, more of a non-organizational services to the communities and.
So donations?
Yeah. Thank you.
Yeah, so donations is one of the ways because donations is tax deductible.
Mm-hmm.
In addition to that, so have you heard of tax havens? So countries where the taxes are very low. So in some countries, say I think Singapore, the tax rate, the corporate tax rate is only 15%, or in Monaco or Cayman Islands, I think. So in some countries or some states in the world, their tax rates are very low, okay, relative to other countries. So one of the ways that companies can avoid taxes is by having their headquarters in a country where it's where the corporate tax is cheaper, so that they are subject to the corporate tax in that particular country. Okay. So this is something that international companies can do because they can choose where they have their headquarters. Okay. So tax haven. Oopsie. How you spell heavens? I think I missed an E somewhere. Okay. Sorry for the handwriting. It's a bit hard to write on the PowerPoint slides. Another thing that companies can also do is something called transfer pricing. So similar to the idea of a tax haven, where you incorporate where the tax rate is low, with transfer pricing, what happens is you can ship your profits from a country where the tax rate is high to a subsidiary or a branch in a different country where the tax rate is lower, okay, through transfer pricing. Okay.
Can you repeat the about tax pricing again, please?
Transfer pricing, you mean?
Yeah, transfer pricing, sorry.
So say if I have two subsidiaries or two different branches in two different countries, I might choose to shift my earnings from a country with a higher tax rate to a country with a lower tax rate, okay, through internal transactions, okay. So for example, I might choose to, so subsidiary B might choose to sell something to subsidiary A and charge a high price, okay, so that they shift their profits to subsidiary B, okay, where the tax rate is lower.
Okay, thank you.
Thanks. All right. So expanded opportunity set. So we mentioned this before at the start with international finance. When companies choose to operate overseas, they open themselves up to bigger markets, cheaper production sites, more resources, and for investors, of course, more investment opportunities. Okay. Okay. Question 3, discuss the major trends that have prevailed in international business during the last 2 decades. Okay, so this is something that we have discussed before at the start of the class. Did someone want to discuss these points again? So what are the trends in the international business landscape that we have seen in the last 2 decades?
Privatization and liberalization, I mean barrier-free trading and privatization has increased over the past 2 decades.
Yeah, that's right. So privatization, yes. Integration between different economies. And also integration geographically as well. So an important trend that we haven't discussed before is the development of the Eurozone, the Euro Union, and the Euro currency, right? So we will discuss this next week. So basically in the 1990s, the European countries, some of the European countries decided to form a union, and they decided to have a common currency within that union, right? So why do you think these countries wanted to have a common currency? What is so good about having a common currency?
Yeah, for trading.
For trading, yes. So if I trade within my union country, I do not have to worry about currency risk, right?
Like
Everyone uses.
For example, the NAFTA agreement for the North American countries. It is easier for them to trade amongst themselves, like the Canada and the US.
And Mexico, yes.
Rather than when compared to America trading with other countries like, say, example, India.
Yeah, so exactly right. So the idea here is similar to the trade agreements in the sense that if you have a union, if you have some commonality, then it's easier for you to trade with your trade partners, okay? Finally, in the last 2 decades, unfortunately, we have seen quite a few financial crises, right? And we will talk about that later on in the course. But the lessons from the financial crisis was that we have, so the economies around the world these days have been very interdependent in the sense that if you see something happening somewhere in the world, it could easily spread to your country, okay, if you have a trade relationship with that country, okay. Okay. Question 5 is a theory question, which is for us to understand why globalization comes about in the first place. So this question states, what are the considerations that might limit the extent to which the theory of comparative advantage is realistic, okay? So the theory of comparative advantage is one of the major arguments for why we should have globalization, okay? So the idea here is that if we are good at something, we should stick to producing that thing. So we should specialize in producing the thing that we are good at, and then we would trade with our neighbor countries, okay, who are good at other things. So in economics, this makes sense because when I produce something that I have comparative advantage at, then I will produce it at the lowest production cost, okay? So I'll be most efficient about producing that product. Similarly, for my neighbor country, if they specialize in what they are good at, they will produce that goods at the lowest cost possible, okay? So they will be the most efficient at that goods, okay? So because we are the most efficient at producing the goods that we specialize in, when we trade, we will share the economic welfare between the two countries, okay? So we will share the cost savings between the countries, okay? So this theory is the foundation for globalization because it argues that countries should trade with each other after they have produced what they are good at, okay? So in Australia, what do you think we are good at? So what is Australia more efficient at? What are the top 3 products that Australia trade with the world?
I think the dairy products.
The live poultry.
The knowledge, the human capital.
The human capital, so the live poultry. And what was the first one?
Dairy products.
Dairy products, right? Yeah, so I think the top one for us is natural resources. And second, agriculture. And I think the last one is education, in the top 3, okay? Compare with another country, say India, what's
the second one, sorry?
Sorry, can you say that again, Sai?
What's the second one, Australia exports?
Agriculture.
Agriculture, okay.
Now, let's pick another example. Let's say India. What are the top 3 products of India? Does anyone coming from India? Can you help me?
First thing is service sector.
Service sector, yes. Second.
And the second one is agriculture.
Agriculture. What's the last? Spices.
Medication.
Medication, yeah. So as you can see, different countries specialize in different things. And normally through trades, you can exchange goods and services with other countries, right? Now, for the theory of comparative advantage to work, there are certain assumptions under the theory, right? And with this theory, the two key assumptions of this theory is firstly free trade, right, between countries, okay? So for countries to be able to exchange their cost savings, relative cost savings, then they should be able to trade with each other, okay? Otherwise, then I will be stuck with the things that I produce, and my neighbor country will be stuck with whatever they produce, okay? If we can't trade with each other. Second, for a comparative advantage to exist in the first place, the factors of production in different countries should not be easily transferable, okay? Which means that the reason why I am very efficient at producing, say, cars, is because the factors of production in my country allow me to do so, okay? And because it's not easy to transfer to other countries, the other countries can't produce cars as efficiently as I am, okay? So for any country to have any specialization, therefore, the factors of production should be quite unique to that country, okay? So in some industries, let's say if we talk about natural resources, that is something that is not quite transferable, right? So you either have it or you don't have it. So in natural resources, normally if a country is blessed with some natural resources, then they will be producing natural resources, okay? And vice versa. In some other countries, in some other industries, for example, like services or technologies, so these factors of productions might be easily transferable, right? Say, for example, with technologies, I can attract talents from a different country to work in my country, right? To produce the same technology, okay? So in some industries, there will be more specialization, and in some other industries, specialization might not be too important, okay? Okay. Moving on to our last question. So in this question, we are asked to just look up on the internet and look for information of a foreign company, okay? So in this case, the example that we're looking at is Samsung. So this is a South Korean company, and it produces electronic devices, right? So suppose that you are an investor and you want to invest in Samsung. The first thing you want to do is to find out information about Samsung, right? So luckily for us, because of the internet, we can easily download information about Samsung on Yahoo Finance. So here we go. So if I'm a foreign investor and I want to invest in Samsung, the first thing I would do is to look at a few financial information about Samsung, okay? So for example, if I look at the website at Yahoo Finance at the moment, what I can see is that I can see a history of the stock prices, right, of Samsung. So this is the daily price movement of Samsung. Here I have some summary information about the trading activity. I've got the closing price, I've got the opened, I've got the bid and ask, which tells me how much liquid the stock is. I also have some information to help me form some sort of assessment about where the stock price is at, right? If I want to know a little bit more, I can go to different tabs. I can go to the charts. So here I've got the daily prices for a 1 year period and I will compare it with a moving average, right? So the purple line here is when I plot the moving average against the current stock price, okay? I can also look at the profile of the company. So this is where the company is located, and these are the key executives, right? These are the key figures of the company. Financials, I can even look at option trading, okay? It's not available for this company. Now, if I want to find out more about the holdings, the shareholdings of the company, here I know, here I have the information about the major holders, the top institutional holders, so on and so forth, right? One of the things that is recently developed is sustainability. So this is what we mentioned before at the start of the class, right? So a lot of investors, a lot of the index funds these days also care about ESG. So how much is the company contributing to the environment, so on and so forth, okay? So for Samsung, for example, on a scale of 0 to 100, their ESG rating is 26, okay? So which is a medium score. In terms of controversies, this is how they score, okay? Relative to their peers. So with Samsung, they tend to be a little bit controversial, okay? Don't know what happens in the last few days, but it looks like it has some controversies here, okay? So the reason for us to do this exercise is to just illustrate how easy it is these days to look up information on a public company that is traded on a foreign market, okay? So imagine before the internet, this is something that is very hard to do, okay? You probably have to mail the company's headquarters to get some information about the company itself. Okay. So that is all the questions that we have for this week. Any questions so far? So this is an introductory topic, so we don't have too much to cover. We mainly just talk about the different issues in the international finance landscape, okay? So for next week onwards, we'll be talking about the topics that are examinable in the subject that I listed before at the start of the class. So to prepare for next week, what we need to do is we need to read up on topics 1 and 2, which is international monetary system and the balance of payments, okay? So these are the 2 topics that we... did someone say something? Sorry, I can't hear you too well.
Yeah, I have a question.
Yeah.
You talked about same currency in different countries like Europe. I have a question about does that really help in production sector in labor, because they can produce in different countries at the same time? Does it really help in a production sector? Sorry.
In the production center or
sector? Sorry.
The production sector. So we are talking about having the same currency between the trade partners in the EU. And your question is, does it really help with the production sector? Is it? Is that the question?
Yes.
Good question. So I think there are 2 things that we can consider here. So if you have a production sector, a production side, sorry, with your neighboring countries, then of course having the same currency will help, because you don't have to worry about currency risk in this case. And besides the production, the production side of the business, if you have the same currency and you can sell goods and services to the customers using the same currency, it will also help in your income as well, okay? So it's not just about the production side. It's also about your currency exposure on the income. Okay. So being able to sell to customers using the same currency might reduce your exposure on the income. Okay.
All right,
Is that
thank
it?
you.
Thanks. We'll talk about the European Union next week. So we can revisit the question next week. All right, so for next week, the topics and questions are topic 1 and 2. Make sure you read the textbook chapters 2 and 3, and if necessary, watch the recordings. I will fine-tune the recording to make sure that it's related to the topic, so that you know which one to watch. I'll do it today and tomorrow. So by Friday, you will have the proper recordings for these topics, okay? Also, it will be best if you guys can at least attempt the questions before you turn up to class. So my experience is that in some tutorials or in some classes, there will be a lot of questions. So I won't be able to go through all of the questions in class. So it's very important that you can tell me which questions you want to go through in class, which are normally the difficult questions. And for the ones that you're more comfortable, you can do them at home, okay? So make sure you do some preparation before you turn up to class next week. And also ask questions, okay? So I want to make the class as interactive as possible to make sure that we get something out of it, okay? Okay, so I think that is it for me for today. Any questions at all, guys, before next week?
If you don't mind, just one more question. Can you just touch on those 3 mini quizzes that in-class quizzes? Like, is that just a random pop-up quiz on the day? There's no way to kind of study for it?
Yeah, so it's a good question. So the reason why I thought that I would introduce the quiz on the day is because I do expect you guys to do some preparation before. But yeah, I think it might be a little bit of a stress, is it?
It's not stress. Is it going to be like the second half of the lecture? You know, you talk about what it's on and then about that week, or is the quiz covered about the previous week? Or what does the quiz cover?
So the quiz will cover the material of the week that we introduce.
Okay.
Yeah. But I think, so after I release the slides on LMS, I've got some requests from students that say they have some clash with some other classes. So, which means that I can't just introduce quizzes at random because they might not be there. So I think I'm going to make a modification here where I'm going to announce the quiz on the Monday of the week.
Okay.
So that we know that on Tuesday when we turn up to class, we will have a quiz at, say, 4 p.m., for example.
Yeah, that'd be great.
Yeah, good question, James.
Thank you.
Thanks, James.
What would the time duration be for the quiz?
It will be about half an hour. So it will be a multiple choice test for half an hour.
Okay.
I will release more information about these quizzes as well as the midterm, probably next week or in week 3. Okay. So if we're looking at about, if we're looking at a 30-minute quiz, we are looking at about 10 to 15 multiple choice questions. Okay. Any more questions?
Hi, Van. I just wanted to know that these quizzes are like are an option or something related with the tutorials, or does it going to have some marks with it?
It will be accessible, Anish. So we would do 3 quizzes, and we will take the top 2 result to go into your gradebook. Okay.
Okay. Yep. Thanks.
So each of the quiz will be worth 5%, and you will get the 2 highest marks.
Okay. Okay, so there are going to be 3 quizzes in
Yeah.
the whole term.
Yeah.
Okay. Yep.
So you will
Thanks,
have
sir.
3 attempts. Yeah. Yeah.
Yep.
Okay.
Thank you. Thank
Okay. Any more questions? So if not, guys, make sure that before we turn up to class next week, make sure you do some readings and attempt some of the questions in the tutorial. And yeah, then I will see you next week for the class.
Thank you.
Thank you.
Thanks, James. Thanks,
Thank
everyone.
you.
Thank
Have a
you.
good day.
Thanks, Ron. See you next week. See you.
Next
Yeah.
week. Bye.
Thank you.
Thank
Thank
you.
you.
Thank you.